All right, everyone, here we are with ticker symbol CTRM, Castor Maritime Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we jump into this chart, I do want every single investor and viewer to be aware that we have so much information to cover towards the second half of this video. Because yesterday, if you guys watched yesterday's videos, we talked about the 10-year Treasury. We're going to update on that. We're going to talk about what Jerome Powell slightly said. We're going to kind of go ahead and summarize it very quickly and briefly. And we're going to talk about the S&P 500 index and why we need to be aware of everything. And also, when I went ahead and first started talking about a correction or crash, where I called it opportunity meets the prepared. So definitely stay tuned on in. I want you guys to learn from this. And a lot of new investors and viewers coming across my channel, or investors coming across the market, or beginners, don't get frustrated or run from the market when this is the time to learn about the market. This is the real time. So stay tuned. I hope you guys learned something new. I'm out here trying to be as much help as possible, especially for investors that are learning, new, and even experienced investors that are not paying close attention to the things that we really need to pay close attention to overall. And I've been paying close attention to it since I first started making these videos, when I thought it was time to do so. I didn't want to have to make them, but I did. So let's jump into this. Stay tuned till the end. So CTRM, Castor Maritime Inc., pulled down, hit newer lows. A lot of people are saying, hey, fundamentals don't matter anymore. Charts, what do they do? What good are they? Well, charts are drawing out the whole entire pattern of everything that's happening and what's bound to happen, right? So we've been below the 50-day moving average since March 2nd, and we've been touching below it since February 22nd, and all the way back here since February 12th. That was the first sign of knowing that we were going to hit newer lows. And even though it was going to fight to come back up and this and that, no matter how good the news was, no matter how great everything was, the charts have been showing it since that point, and especially since the bull run was so big, right? So this needed to stay above $1. I've been saying it, and the support definitely got broken through, and it got broken through today, the most significant amount that we've ever seen CTRM drop in this bearish run. So the 50-day moving average is 90.85. If we're below it, we're in bearish territory. If we're above it, we're in bullish territory. Our support currently is 74 cents. Probably one of the most important points in the chart right now to pay close attention to, because if that gets broken through, this could be on its way down to newer lows, new support levels, and getting deeper, further away from the 50-day moving average. Now, for every single investor, I just want to quickly go ahead and throw this out there. This is a rhetorical question. You don't have to answer it, but if you want to comment down below how you feel, you can. But this is the time where you're supposed to look at the stock and say, do I believe in this stock? Do I understand their business model? Are they growing? These are all the questions you want to ask yourself, and you say, am I just going to hold? Is it time to sell and cut my small losses and get back in at another time if this continues going lower? Or do I buy more because I believe this stock can get out of where it's at now? Those are the questions as investors you should be asking yourself, and I am not here to tell you guys to buy, sell, or hold any positions on any ticker symbols, and it's not financial advice, but I do want you guys to open your perspective to these thoughts and how you're supposed to be looking at the market right now. So 74 cents is our support. The 50-day moving average is a little bit further away from the resistance, but our resistance is 85.49. The 50-day moving average is 90 cents way up here, and anything below that, again, I said, is bearish territory. So if 85 cents gets broken through, the bulls still have some work to do. This does not guarantee them back into bullish territory. This is just a stepping stone and an indicator for us investors to know where the momentum is going. And if the bulls can use it as support, they could be on their way up to newer highs and new resistance levels. I hope you guys learned something new so far, and I can't wait to share all the information on the second half of this video that you don't want to miss. So if you learned something new and you're a first-time viewer and investor coming across the channel, hit that subscribe button. Don't forget to click on the bell to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Hang on tight, please. I really want you guys to be aware of this. I've been wanting everyone to be aware of this since we hit the peak on the S&P 500 index. And now more than ever, you definitely want to pay close attention to what's going on. So I hope that all the information is worth your time and valuable, and that you are now aware of what's going on and you have a newer perspective to be prepared. As always, thank you, and let's stay tuned for all the information. So for everyone that has stayed to this point in the video, I'm going to go ahead and show you guys a short clip of a video that I talked about several times, and I wanted every single investor and viewer to not miss out on it. And I know that sometimes you guys look at my videos and you're like, oh my gosh, 10 minutes, 14 minutes, you know, and it's really because I put in the effort and time. I know some people say I talk a lot, but I really need you guys to understand. And not only that, but some of you guys might understand everything, but there's a lot of investors and viewers that are completely unaware to what's going on. So I like to break everything down as simplified as possible, and it sometimes takes time, as I'm speaking right now. So all I'm asking for is a minute of your time. The next minute is going to show the date of that video, where we were at, what I drew out, and even though the drawing is not exactly the same, it's going in the same direction, and these are the circles I want you to remember when I talk about the peaks and how the stock market was going to continue to reflect. I also talk about different topics there, which we're going to touch base after the video. So stay tuned and hang on tight. And thank you guys so much for your patience. I hope you guys are learning and that you guys are receiving information and insight that gives you some better understanding of the market. Stay tuned. 39.50, and it's been going down since. So one thing I want us to pay close attention to is if the market continues to build this behavior. This is the behavior that I'm seeing, right? If it continues this, and we're hitting newer lows, and it continues to hit these peaks, right? Then the market is struggling to hold itself up because the repurchase agreements of these dates do not exist right now. And a lot of people don't realize how much of an impact the Federal Reserve's decisions has on the overall market. Like, the only reason why the market's been pushing up higher, it's all the forward outlook and hope, but it's these dates. These dates hold up the market from going any lower or from staying stagnant. It keeps on pushing it. It keeps on creating anticipation, excitement, you know, the speculation and the hope of seeing ticker symbols going up. So I didn't really want to make this video, and I didn't want to have to, but I need to make every single investor and viewer aware that we might be in the middle of a crash or correction already getting started. So as you can see, the drawing is not exactly the same, but we could see the peaks that I was talking about and the direction that we're going in, right? That's what I wanted every single investor and viewer to be aware of. And then I went ahead and slightly talked about the repurchase agreements. Now, I want every single investor and viewer to be aware that if you want to know more about that, I talk about it in the full video, but it has some correlation to do with what we talked about yesterday, which is right here, the Treasury yield of 10 years. It's right now at 1.55. Yesterday, it was at 1.47. I told every single investor, add this to your watch list or keep it somewhere where you can search it up or look at it and treat it as if it's the S&P 500, the Dow, and the NASDAQ, or the Russell 2000. Many people use these to understand the overall markets, and they're all down, and this is going up. Now, the higher this goes, the more down these can go, but there will be a point where this can start going up, and even if this is going higher, this won't have so much of an effect on the overall market. The reason why it's affecting the market is because it's moving up rapidly and faster than expected, which is putting fear and uncertainty into the markets. Now, I talked about a bigger picture here about this, that this could reach back to 2%. This could reach back up to 3%. And if it kind of stabilizes, the market's going to feel it. But then once everything kind of rebalances, the market can start to pull itself back up, even if this was to go higher, sideways, or downwards, which is what's bound to probably happen. Or if things do change by the Fed, it can really have an impact on stabilizing this or pulling it back down. But as we can read right here, Fed Chair Powell Fed will be patient, quote unquote, on keeping easy money policy. That means that they're not going to really do much about anything if interest rates go up, and he's going to try his best to keep it near zero, even if inflationary pressures start to rise. So basically, if inflation comes, he's going to try to keep rates low, but he's going to allow inflation to play itself out. And it's bound to happen. It might be coming, and there's going to be a big meeting towards the end of March or April, and we may be feeling some turbulence for the next coming months. Now, Treasury yield is going upwards faster than expected as well. So even if he's saying, we're going to keep rates near zero, rates can have a mind of its own. Even if he wants to keep it near zero, they can start to inflate as well with everything else. And this could have an effect overall on the S&P, the Dow, and the NASDAQ. So we need to be aware of this and not be scared of this. There's two ways to look at the market when it's going down. Actually, a misfortune or an opportunity. So it's all about your perspective, your goal, and this is where you learn that day trading and swing trading is only good while there's a bull market. It becomes a lot more difficult when the market's going down or it's turbulent, and also it's not the true way, in my opinion, of investing. I day trade and swing trade myself. It's one good strategy, but it's not an investor's strategy. A true investor, and I hope I'm not offending anyone or anything like that, but the overall true investor invests long term. You need to invest 1 month, 6 months, 1 year, 5 years out from now. That's what investing is. The shorter the time you are in a stock, the closer you are to gambling or playing a game. Like, that's all it really is. Now, there are strategies to day trade and swing trade that can make you a quick buck as long as you know what you're doing. But to be a successful, profitable investor and minimize losses and maximize profits, you have to be a strategic investor looking for the opportunity, and you have to understand the stocks that you're investing in, because if you don't understand them, don't invest in them at all. So here we are with the tweet of the day. What is the first thing you look for in a stock to find any interest or even considering to do any further due diligence? I look forward to everyone's comments. I will be mentioning what it is that I look for first in tomorrow's video. So everyone's comments were very interesting. I appreciate you guys taking the time to comment, and they were very insightful, not only for myself, but for every single investor over at the Twitter, to see those comments and learn from them. There was some great comments and strategies there. So the first thing I look for, believe it or not, and I'm just going to click on, let's just click on Apple. And Apple is like the highest market cap. But the first thing I look for is market cap. Believe it or not, that's the first thing I look for. The second thing I look for is profitability. How profitable are they compared to their revenue? So you could see here that 25% of their revenue per year is profit. So they're 25% profitable. That's Apple. Now, there's a lot of other smaller companies that make less revenue but more net income, and they're growing really fast. So that's what I like to look for. Those are the two things: profitability and net income, and then the market cap. The market cap lets you know where it's at, how much higher it could go, and also what it's worth today could be double or triple in the years to come, or if you want to say it in simpler terms, tomorrow. So very interesting stuff to really look for in a stock. Those are like the two most simplest things: market cap, profitability, and within that profitability, how much of it is revenue, how much of it is profit, and then divide it to get a percentage of what the profit really is. And you could see it here. It's already calculated about 20%. I said 25, but it's about 20% of the revenue, which means that they are making $200 billion in money coming in, but what's staying in the books is 20% of that. So it's a pretty small percentage for all the movement of money that's going on. But not to say that Apple is not a powerhouse. This is a major powerhouse. It was just to use it as a simple example. As always, guys, thank you guys so much for watching, and and let's make some money.